Like any form of property investment, buying commercial property can be tricky and can catch even the most experienced investors unaware. Simple mistakes are generally the most common and often relate to lack of due diligence before the purchase, not the actual running and maintenance of the property.
Ultimately, commercial real estate is super interest rate sensitive.
What's going on in commercial real estate?
Who has the commercial real estate exposure?
So we hear a lot about commercial real estate right now, not all of it good. A lot of focus on office buildings.
So, what are the most common mistakes when it comes to commercial property investment? Let's take a look. At the top of the list would be buying a property that doesn't suit your financial goals and risk appetite. This is often because of a lack of preparation. Before you even start looking for properties, you need to be clear about your motivations, financial circumstances, price range, and overall plan in the long run. Without careful preparation, you're potentially going to end up buying an asset that doesn't meet any of your needs, and you're likely to run into various issues in the future. Another common error is failing to analyze the attributes of competing commercial properties in a chosen location and how these factors inhibit or improve asset performance, and importantly, its rentability. A commercial property should satisfy all of the key requirements of the intended tenant type, which may include on-site parking, access to public transport, location, access, and zoning are important factors that will impact the long-term ability to attract tenants and overall asset performance. So, to avoid this mistake, you need to do thorough area research. Next, and it really pains me to say this because it seems so obvious, but time and time again, buyers fail to undertake independent investigation to ensure building and improvements are compliant with local, state, and federal regulations and requirements. You need to ensure that you undertake compliance review of zoning, building permits, and building code certifications, as well as existing and planned developments in the surrounding area as part of your due diligence process. If you don't, you'll almost certainly run into future costs and issues. Another big mistake is getting the location wrong. Remember, with commercial properties, the value and rate of return are largely determined by supply and demand. And given that location drives demand, location should be on the forefront of factors motivating the purchase. Unfortunately, too many investors are influenced by the look and feel of a particular building, which can sometimes disguise poor capital growth in substandard locations. Obviously, this step will also come down to what your purchasing strategy is. While a well-located property may provide a less attractive yield, it'll often have a greater potential for future capital growth. But if you're buying for rental return, then a high yield may be a more important factor, and that will also help determine where you look for properties. A few other mistakes include not checking that the rent is fair market rent, not thoroughly checking the existing lease agreement, buying in a location with major developments of competing properties, buying a leaseback property, and in not investigating the tenant enough. So there are actually quite a few mistakes you can make. But ultimately, the best thing you can do is stick to the fundamentals and ensure that you plan properly. A boring and simple commercial in the right location will far outweigh a value-added one in an inferior location. Hopefully, now that you know what to look out for, you won't run into the same issues. And as an investor myself, I've always wanted to help others achieve their goals. So if you have any questions about mistakes to avoid, please feel free to drop them in the comment section below or reach out to me directly. Otherwise, remember to like and subscribe and share this video with your investor friends. I'm Steve Palise, author of Commercial Property Investing Explained Simply. Thanks, guys.